So here's the big question. If mortgage rates go down, won't that make the inventory position we're in even worse as demand will pick up? We'll talk more about that in today's video. Before we jump in, as a reminder, I'm Mike Thornton. I'm a realtor here in the west suburbs of Chicago. Would love to hear from you if you're looking to make a move here or want to know more about the market. You can set up a 15-minute discovery call with our team. And as always, if you find this content useful, would love that you like, share, subscribe, stay connected with us. We'd love to go on this journey with you as we continue to look into the real estate market. So let's jump in. So here's the big question, right? We have the supply shortage right now, and yet some people are calling for rates to go down. And you might be thinking, well, if rates go down, isn't that going to make the problem even worse? Now, historically speaking, yes, it would. As interest rates go down, demand does pick up. But the real issue in today's market is that there's a stalemate and there's this lock-in effect with sellers who are unwilling to trade out of their current rate into the new market rate because the delta is too wide between what they've locked in and what they can get in the open market. So ironically, the only way to solve that is to have more and more of those people being willing to trade out of their current rate into a slightly higher rate. Now, that will take months and even years to play out, but the only way for that to happen sooner than later is to actually bring down mortgage rates and to let that demand pick up, because it will. But what it'll also do is allow more sellers to jump into the market. And so you'll have a little bit more velocity of homes turning over, which will not increase inventory right away. It could even make it lower as demand spikes, but it's building towards longer term health where you get the average mortgage rate to float up over time closer to where a sustainable level is, because the average rate right now that's locked in isn't very sustainable, and we can't really go back to that point in time. And that's part of the risk and part of the con of what the Fed did 2 years ago when they raised rates so drastically, so quickly, is it does create that lock-in effect. Typically, rates are raised very slowly over time to avoid something like this, but that wasn't done. So we're in this problem now. And ironically, the only way to fix it is to get more sellers willing to trade into the market. And the only way to do that is to lower mortgage rates, go through the temporary pain of what that would do to the market as that backlog of demand gets into the market. But over time, that's really the only way to get to some sort of normality in the housing market. And again, that would be months or years down the road at the very earliest. We'd love to hear your thoughts on that and whether you have a different take on how to get out of this situation that we're in right now with high appreciation and low supply in the market.